From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. I'm Nadine Blaney here with Carl Rudder. It is Monday the 14th of August. How are you feeling?
I'm feeling pretty good, better than the market perhaps. We've got a lot to get through today. We've got a lot to get through this week. It's going to be absolutely epic, but well, a few headwinds blowing us in the face, and now we've got the ASX 200 down by, well, about 1%.
Yeah, it's wasn't a very good way to start the week at all. Very reflective of the weather outside the studios here in Sydney. So what do you think? Is it this Chinese property giant Country Garden shares plummeting, its bonds being pressured offshore when its onshore paper was suspended from trading, debt problems really deepening there in the property sector in China? Do you think it was that? Because doesn't that just mean we're going to see more Chinese stimulus potentially?
Well, I'm not too sure. I really can't say how much of it is to do with Country Garden in particular. I mean, it's certainly got to be playing a factor. You sort of get those shivers of Evergrande 2.0. But we did have some weak data out of China over the weekend around sort of credit growth and money supply. It just would seem that this, any efforts that policymakers have made so far isn't gaining traction yet. Maybe just a lot of words and not much follow through. So, I mean, I think really that's what we've seen. You can see it midday, the market really taking a significant tumble, and it was those materials names that were the underperformers for us today. Yeah,
and don't forget this is all happening at the same time. We've got reporting season on, and lots to talk about when it comes to the local earnings that are coming through. All right, well, you alluded to it, the materials space, the miners being one of the worst performers. I mean, that's chunky. That's really punchy to see BHP and Rio Tinto down by about 2%.
Yeah, no, not trivial for blue chip names to be down by that much. Of course, it was right across the board as well that we saw that kind of a weakness. And 9 out of 11 sectors, at least when I last checked, were in negative territory. We saw some weight from the banks as well. Not as profound in terms of the sell-off, but broad-based, nevertheless, off by 0.8% there. The ANZ Commonwealth Bank, obviously the barometer of our economy here, off by 0.5%.
Bendigo is one of those companies reporting, and the regional banks down by about 2.7%, so really underperforming its bigger peers. Marnie Baker, the CEO, saying that, look, its strategy is being executed, and that net interest margins were higher. They're not seeing really overt signs of stress in their mortgage holding cohort, but clearly market not loving the detail. Healthcare.
Yes, another sector that's, largely underperformed. ResMed bounced back, but that's after obviously getting, taken to the cleaners over the last 3 or 4 sessions. See a sell-off by 1.2%. Reports tomorrow, of course.
Cochlear also reports tomorrow. We'll be speaking with Dick Howitt, its CEO. I think it's in the afternoon, so we'll remind you of that tomorrow, and of course get it up online ASAP. But yeah, ResMed, I mean, you would think that there would be some that believe in the long-term story of the company buying in.
Even if it's just to buy back your shorts. But let's get just to the three. There's more on the health check there. Broad-based losses.
Yep.
Although Pro Medica seems to be fairly resilient. Ansell actually, reporting as well. So actually a set of numbers we'll get through in a second when we break all of that down. But let's get to the three themes. And just before we do, I mean, the obvious one is that we have seen this kind of a sell-off. Point made by Martin Somasundaram last week was talking about the effect that the weaker Aussie dollar has on some of our blue chip names. A lot of the international folks are forced to sell, the likes of CSL, CBA, some of the miners out of their portfolio. So we have seen the Aussie at 64.5 or around that at different stages. Maybe something of that going on today as well.
You call him Matan? I call him Mathan?
Well,
say it again.
Martin Somasundaram is how the our what we'll say, cultural attaches, is that what you call it in the office?
Yeah. But anyways, my point was, I spoke with him today. He sees the Aussie heading down to 63. So yeah, we were factoring that into some of the, equations that we were doing around some of these, locally listed companies with global exposure. So that was my plug for the call today. Mathan and David Lane from Ord Minnett joining us. And the stock of the day was, it was carsales.com, which I think is the best performer. We'll find out in just a tick. What's losing steam? Market itself.
Yeah, absolutely losing steam. The results are absolutely flooding in this week. It's going to be epic. China property wobbles. We will get to it in a bit, but we're also looking at the next 24 hours being huge on a corporate macroeconomic front, both locally and internationally too. So we're just getting hit with a wall of information right now, which markets just have to try and find a way to digest.
Ansell, we did mention that it was one of the underperformers in the healthcare space. So let's look at why its full year net profit was down by 6.6%, revenue down as well, dividend cut, healthcare sales down. So don't forget that Ansell is cycling, still you would think, a lot of the benefit that it got through the COVID pandemic period. So trading at $23.53. I'll be interested in reading the broker notes that come out on that one a little bit, later today and into tomorrow as well.
Absolutely. The great glove glut continues in Australia. Horizon, though, was another one that we had our eyes on, a blue chip name. Share price movement actually probably slipped to the bottom of my radar, to be honest. But just looking at the numbers here, full year net profit down 46%, final dividend of 8 cents per share, sticking to a 75% payout ratio. But what do we get as far as response? Well, it was
interesting. So the share price ended down by about 3%. They saw volumes really being impacted by wet weather, a third-party trail derailment, amongst some other factors. But they saw coal volumes rising. And that had given the CEO some confidence in FY24, but clearly the market's not buying that really pretty picture that was attempted to be painted on the outlook. What did win the day was carsales.com. Everyone I spoke to agreed that this is, a strong company, management executing really well, and, the outlook looking pretty good. So there you go, revenue up by 53%.
Yeah, it was really remarkable. And I think, was it yourself or Andrew spoke to
Andrew spoke with Cameron McIntyre, the CEO. That's up online.
Yeah, it was a really good interview. Yeah. Again, just the ways that we were, saw the weaving of just the kind of macro there, of course, but also just the execution of the strategy there for the business. Obviously been, relatively successful, it would seem.
And in many different markets around the world, Brazil. We'll be watching that one. Lend-Lease, this is another company that I wrote up this morning, Kyle. And down by 3.6% today. So full year net loss coming through. It's talking up its funds under management. So there's a bit of a transition going on between Lend-Lease, transitioning into this fund manager as opposed to sort of builder, executor.
Sort of thing.
But, it's taking some time, and of course valuations for a lot of these, these buildings, projects are being written down. So that was a pretty punchy downgrade coming through from the market there.
Yeah, 3.6% for the day. Last but not least, you did speak about Bendigo Bank before. We'll keep an eye on it because while it ties into some of those themes throughout the banks we've been following recently, also the Australian economy. I think the big development was, of course, a miss in underlying earnings, and also the net interest margin, I think, was a fraction below where analysts were expecting. And there is the sense now that we've seen a bit of a peak for both profits and margins for the banks. And, perhaps this hinted at that just a little bit too. So the share price was down for the session by how much in the end? I'll just keep or try and take a look at now. Almost 3%. So a disappointing result, it has to be said, from Bendigo and Adelaide Bank.
Yep, of course, talking about digitization and also cost control. So it is... when we're reading through all of these results, it's just so interesting to hear again and again and again, headcount cost controls. Even JB Hi-Fi really talking up its ability to control costs and the cost of doing business, et cetera, et cetera. So that gives us some insight into the state of the labor market here in Australia as well. But let's just, weather's dismal. I do like your new haircut though. It's keeping the shine coming on here. It's like a sunny day.
It's like I've constantly got a good idea or something like that, just lighting up.
Anyhow, let's focus on the positive. Carsales.com, it was a stock of the day. Let's listen into what my guests had to say.
It's probably a better play, but I think, it's hard to go against people like Carsales and REA because they have a number of leverages to play. They can pull a lot of levers to keep the growth rate going. They're not going to get blown away, and they're a diversified model. So hard not to like them, but I would not be chasing here. If you want the same thematic, if you think the overall macro holds up, then Seek is probably a better play for you.
A very, very similar view. We've got a hold on them. Think that they're an excellent business, very, very well managed, and that result shows that they can deliver and that they're doing very, very well. But Yeah, as Nathan said, the valuation probably doesn't hold up at current levels. We've got a fair value on them of about $23, so they're currently trading above that. Now, the analysts may well look at today's result and readjust that, but at the moment, got a hold recommendation on it.
So would you say the consensus there was sort of a hold at the moment?
Hold only because of its valuation, but really like the business and long-term success story, Australian success story, all the rest of it. But yeah, overall they're pretty positive on it.
Yeah, totally, and 7% on the day. Really ran higher into the close as well. So
yeah, it did.
Good news there for car sales.
Hey, Josh Gilbert from eToro is patiently standing by, listening to us natter on. Josh, when you think of the day, like, what was it that sent our shares so significantly lower post 12 p.m., do you think?
So I think a lot of it came from China. Obviously, a lot of weakness there today. Again, just seems to be bad news after bad news in China. I think a lot of it came from some fears from sort of the largest, one of the largest private wealth managers sort of not meeting payments, and that sort of spilled over into the sort of the property sector, and I think that just general sentiment around just sort of put a bit of a bearish spin on the markets today. I think iron ore dropped pretty significantly, about 2.5%. That then saw material sector fall as the lowest sector of the day. I think it was down 1.8% last time I looked. So again, that's had a big weight on the market. I think BHP down 2.5%, Rio Tinto, and you've got major names like that down quite significantly. It's always going to be a drag on the market after what I thought was a pretty decent day in regards to reporting season. But yeah, I think that news from China today has just sort of dragged the market lower.
Yeah, certainly has got us off on the wrong foot. We're still seeing some steam coming out of tech, and that kind of lined us up for, I guess, a week open too today. So, Wall Street tech, I should say. So, again, starting to see maybe some of the steam out of the rally come out on Wall Street.
Yeah, so I think that the idea now is that we've gone from looking at this idea that rates are going to be cut, or we've seen the last hike from the Fed. I think we investors wanted to see that was going to be the last hike. I think inflation data probably was in line with what most of the market had expected. Headline picked up a little bit, but core was the sort of the main number that sort of fell. But I think now the expectation is, okay, well, rates are still going to stay a little bit higher for longer. We've got oil picking up quite significantly. That's going to sort of feed back into this sort of inflation print again as well. So I think that, investors are now turning to the idea, as I say, that rates are probably going to stay higher for longer, even though we might have seen the last hike from, say, the RBA and from the Fed. Those rate cuts really aren't on the horizon until the middle of 2024, which I think is dialing back some of those expectations that we had earlier in the year, and why I think tech did so well early on. So I think, yeah, we're sort of taking a bit of a welcome breather that I think many expected.
Okay. When you think of this upcoming session in the States, overseas, UK, whatever, what's really on your radar? It looked to me to be pretty quiet out there.
Yeah, I think we had a big bulk of data last week, really. Obviously, from that US inflation reading, I think China tomorrow is probably going to be where we see most of the action coming from. Big data dump there. We've got retail sales, we've got unemployment and industrial production as well. So again, that's going to be the key, I think, to all of this, especially after the back of last week's data. We had CPI, which obviously fell to deflation. We had exports contracting even further, and we're still not yet to see sort of that action from officials in regards to sort of stimulus measures. So I think, we've obviously got central banks there that are obviously moving cautiously as well. The PBOC aren't quick to be sort of cutting rates. We've got the yuan trading at, I think, yearly lows as of today as well. So they don't want to put any more pressure on that. But again, what I think we saw last week from that deflation reading in China was that, maybe bad news could have been good news for equities, in terms of a silver lining being, okay, this is when we're now going to see stimulus. This is when we're now going to see, the sort of policymakers step up. But that hasn't been the case. So although I think investors are maybe thinking, okay, look, more bad news could be good news, but that hasn't proved to be sort of the case yet. And I think that, they've held out on stimulus. I'm not sure why tomorrow's data may be any different. But again, if it shows further signs of deterioration, we're going to see more weakness in China tomorrow. And I think that's going to spill across global markets. This is the only economy really, or the largest economy that's set to show the largest growth in the world this year. So if that continues to sort of deteriorate, then that has global repercussions on not just us here in Australia, but also over in the US as well.
And I guess locally tomorrow, and probably for the next few days after that, I mean, a lot of traders will be keeping their eye out for some, fairly significant earnings results from ASX listed companies.
Yeah, absolutely. I mean, we've kind of focused a little bit on reporting season probably over the last sort of week or two, maybe put macro locally to the side a little bit. We still got some big news macro wise this week as well. We've got unemployment and wages data. So two pretty key data points to sort of keep an eye for there. I mean, the wages number I think is going to be really important. That's obviously a quarterly reading. That's set to rise again, and unemployment is expected to stay very resilient where it was, I think, about 3.5%. So those two numbers, again, I think just show how hot the labour market is right now, and are two numbers that probably the RBA are wanting to see go lower. And in terms of reporting season, I think we've got CSL, it's tomorrow. Then we've got Telstra later in the week and Transurban. So it is a huge week in that sense as well. I think CSL will probably capture most of the attention there. But I think, what we've seen so far, and probably what investors, especially looking for tomorrow on CSL, is a little bit of resiliency. Obviously, they downgraded in sort of, peak sort of confession, in that confession window, and maybe it was maybe a little bit overdone in terms of that sell-off. I think the focus will be looking at fiscal year 24, because they downgraded guidance on that when they downgraded guidance for fiscal year 23 as well. So if we can maybe get a little bit of positivity coming through for fiscal year 24, then I think the market may like it, given how far it's sort of sold off since that sort of early confession as well. But I think those are the names to watch: CSL, Transurban, and Telstra later in the week.
Okay, thanks for the heads up, Josh. Hey, I hope you have a good night, and we look forward to seeing you next week.
Thanks. Take
care,
care, guys.
Gilbert, they're joining us from eToro. Well, I think we've sort of foreshadowed some of these leaders and laggards, so we might be able to keep this pretty snappy today. What do you think? I think car sales.
Well, let's see what they are. It's car sales at the top there. Lake Resources regaining ground. It's been volatile recently, actually.
It sure has.
I can't pronounce the mine or why it rallied in 22% in the space of a session, but Thursday there was an update about a particular mine. It got delivered on Friday. That update, share came off by 5%. We've bounced by 6%. I don't think there's any other news than that. I think we'll leave it there. Okay,
Imugene. So its Vaccina has cleared a trial of cohort 3 of its IT monotherapy. So good news there in testing. It's a biotech, of course. Sims Metals is up by 3%. No news there. And Boral just still, looking really, really good after its result last week. There was lots of positivity about Boral. And in fact, it came up on the call yet again today. Right. Actually, Nathan is taking a bit of profits in that, and James Hardy, but, good result coming through there.
Yep.
Laggards, again, let's look for our reporting season morsels.
And Elders, did you find any news on that in the end?
There's no news on
I couldn't find anything,
Elders.
But it was obviously a significant move. So we'll see if, I don't know if there's any director selling or something that we can get, I guess, in the next couple of days is when that perhaps becomes known. But Pilbara Minerals, well, it's just a high beta play on the material sector, of course, but after running up fairly significantly, it's back to around $5. Some of those lithium and rare earth names.
Alchem reported last week, and it has seen its price target lifted 1% to $19.20 per share by Macquarie. But I just think there's sometimes on a negative day, it's just negative. And the lithium names,
small mine is just overshooting, isn't it?
Yeah. And it's been, it's been quite the run. Okay, so tonight we already said there's really, honestly, not a lot happening. We're not being lazy. There just really isn't on the global scene. But we've got plenty to go through tomorrow. Yeah,
exactly. Macro here in China, and earnings. This is just obviously small snapshot of them. But CSL, Cochlear, Prime Medicus, Seek, Treasury Wines, Challenger was one that Brodie Harold said that he's got his eye keen on. And NAB's quarterly report too can be market moving. Minutes and wage price data. Interesting, 3.7% is the forecast, but I think there's the sense that it doesn't take into account perhaps some of the little institutional changes that we've seen around the minimum wage. So maybe not as impactful, but you never know if it comes to the upside. Obviously, we'll be talking potentially about rate hikes again.
I didn't spend a whole lot of time on air today, Kyle. I got the call, and now I'm lucky to be here with you. But I will say this, out of the corner of my ear, I heard a lot of amazing interviews happening. Some of them will be in our newsletter, the COB. It's an accompaniment to this podcast and this show. But who'd you chat? You had Paul Brennan in for the big picture. What was his assessment?
Talking just about the kind of case for Goldilocks, and then we sort of picked apart a little bit the second order impacts of that, which is, okay, well, we get potentially stronger growth and inflation coming down, but is there the risk that it starts taking off again and we sort of see inflation lifting off of a higher base? Also had Sean Callow coming in giving a very in-depth analysis on the property market, the foreign exchange market, of course, as well. So that was also equally interesting. So, well, of course, always with me, a lot of macro chat, really enjoyed that. But setting us up really well for the week. Yeah,
he does love his big picture. But we've got on our website all of our reporting season analysis that's really easy to get to. You just go down the page and there's a rail, as we call it in the biz, with all of the reporting season interviews that we do during the day. So getting stock specific. Shall we?
We shall.
I hope you have a good night.
See you then.